If you are trading for some time, then you must have heard the fact that 90 to 95% retail trader lose their account money. Now, if 95% is losing their money, there must be 5% who is gaining this money. Now, in trading community, we tell them as big boys. Now, as a retail trader, if you want to be profitable, then you have to follow the footstep of these big boys. You have to know what strategy they are using to become such a highly profitable. Now, today I'm gonna reveal a strategy that only these 5% people uses, these big boys uses. If this is something interesting to you, then smash the thumbs up button. You see this red little button says subscribe. Click on it. Press the bell notification button so that you don't miss out any of the content I release in the future. With that said, let's get into it. Okay guys, so let's understand the strategy of the big boys. Now before you understand the strategy, I want you to pay full attention to it because it is very important. To understand the strategy, you first need to understand the basic concept of market structure, how the forex market really works. Now, to understand, to make it easy for you, to be easier for you to imagine, I have created an analogy of building section. So it is very simple and easy if you understand this concept. And forex market price or any kind of market price moves exactly like this. I will explain this one now. So say for example, we have taken a section of a building. This is the door, this is the ground floor, and there is a stairs to climb to the next floor, and this is the ceiling. So this is the ceiling of the ground floor, and then this is the slab of the ground floor, this thickness, and then this is the floor of the first floor, or you can say floor of the first floor, and this is the say roof of the house building. So this is the ceiling of the second floor or first floor, and that's how all is aligned with this. Now let's consider that there are two balls. One is on the first floor of the first floor, or level 1 floor, and one is in the ground floor ceiling. Now let's assume that the prices started to move from here. So for example, one day you wake up in the morning and you saw that the price is here in the floor of the ground floor. Now forex price or any kind of price will never move in straight line. Remember, this is the first thing you have to understand. No price will move in straight line. Price moves in a pattern like this. So first there will be a movement, and then there is a correction. It's called retracement or correction. And then there will be another push, and then there is a retracement. So when the price is in an uptrend, they will move like this. And then there will be another push, and then there will be a retracement. And there will be another push, and then there will be a retracement. So that's how forex market price or any kind of market price moves. Now the same thing is applicable with the staircase in a house. So if you want to climb from ground floor to the roof of the first floor, then you need to climb by the stair. You can't jump. The same analogy. So how the stairs is formed? There is a rise, and then there is a retracement or tread, and then rise, and then tread, and then rise, and that's how slowly you will move to the next floor. Now what you have to do as a trader, the big boys, the people who make the most of the money, they don't trade all the way. The new retail trader, the biggest problem of the new trader or the retail trader is they always think that when the price is in the top or up, they sell. So when they see price like here, they say, oh, the price is in the up, oh, let's sell it. Or when they see the price is like here below, then they, oh, the price is below, then buy it. But you have to realize that this floor and ceiling. So when the price is here, look, pay attention here. When the price is here in relation to this price, that means when the ball is here in relation to this ball will not fall down below. That means when the price is here, the price will not fall below because there is a floor here. Another thing is that when the price is here on the ceiling, the price will not go above, it should fall back below. And that is the secret that you have to know. You have to know that this is a floor of the price, and in relation to this floor you have to find out where exactly the price is sitting. You understood so far? So far with me? That's great. Now, this is floor, this is ceiling. So when the price traveled up to here, if the price break this level and go up here, standing over here, that means when the price is settled, this level will be considered as a base for this price, and in that case you need to consider buying on this level. But if this price settle on the ceiling, that means if this ball is the ceiling in relation to this level, this is called the key level, or this thickness or slab is a key level. If the price settle here, then you have to consider selling in relation to this floor. So even if you see the price is here above this level, do not consider instantly selling. You need to find out the exact location of the price and the key level to see either to buy or sell. Now, the term called key level, or the support resistance, or the supply and demand zone, is the main thing that you have to know to learn the strategy. So this is the key level. So this is the level you need. I will show you in the real chart example, but for now this is the level that you have to look at to find out the relationship with this key level of the price, so that you know what to do, either to buy or sell or go long or short. So again, I'm repeating. So when the price settle in the ceiling, then we will be selling in relation to this key level. When the price is here above this floor, then we will be buying in relation to this floor, because there is a strong support or resistance in this zone. Now, if you understand this concept, the next step should be very, very easy for you. Now, let's go to the real chart and see how we can build a key level so that you can apply the strategy that we are talking about. Okay, so let's see this example now, and let's see the real Okay, so let's see the example now about the key level, and let's learn the strategy and how we can trade the market using this strategy. So now, if you look at this market structure on the daily chart on the gold, what we see is, look at this one here. So creating every time lower high and lower low, and the price fall down here. What happened after that? Look, the price has bounced from this level. So if you see this level here, so this is a level that has created price after bouncing from this zone, and the price has gone up, came back here. Look, from the same zone the price has bounced again. By bouncing it, what it has done, let's zoom into it. What it has done is, look, it has created a level, that is, we can compare with the floor level that we have shown a little bit earlier. So if you consider this one as a floor, then in relation to this floor where the price is sitting, first of all, see, this red candle came here, broke below this level, came to the ceiling. So this is the ceiling and this is the floor. What happened after? Went above this level. That means it has gone above the ceiling. So if this prices was staying here, for example, if this red candle closed here, then we would consider that this price is in the ceiling level. But now it has sitting on the floor level, and because on the floor level we are not selling anymore. It has came back here, but it closed always above. So that means that here the price is in the floor. So when a ball is on the floor, what do you expect? Do you expect it to break and fall back below, or bounce up? That's what happened. It has bounced up. And then when the price came here again, look, this red candle closed above this floor level, and this one, next one, broke below to the ceiling but settled above the floor. So what happened? So it tested again, so multiple times the price came here, bounce, couldn't break below this level, couldn't come to the ceiling. As a result, what happened? The price had another bounce, and then slowly came. What happened here? Look, the price, see this candle, this red candle, the price is in the above this ceiling, and the next one, what happened? Look, strongly close back below. Now after that, what happened? When this red candle closed back below, the price came to the ceiling level. That means in the ground floor. Say it was first floor, the price came to the ground floor. When the price came to the ground floor, the prices started to fall. That means now we will consider this one as ceiling, and the price is falling back below. And after that, what happened? See, from this level, the price again creating a higher high, that means in an uptrend, and went to the ceiling. And from the ceiling, exactly same way, because look, this this green candle could not break this ceiling level. So as a result, because the price is in the ceiling level, the price couldn't break through this and started to move back below, creating a lower high and lower low. And finally, what happened? Look, this green candle, look, this green candle exactly broke this big slab level and closed above. So that is the perfect scenario, that this level is broken. And when this level is broken, what happened? The price came back here to retest this level. Always remember, when there is a break of structure or level, in most cases the price will come for a retest. And retest means it is trying to break again, but as because it couldn't come back here in the ceiling level again, so that traders started to think that, okay, this price is holding on the floor, not in the ceiling. If it again broke below close here, we would consider that the price in the ceiling and we would consider selling. But because the price didn't break the level, didn't come to the ceiling, still holding on the floor, and then next, what happened? Everyone started to buy and the price has gone up. And the same thing repeating everywhere here. So that when this red candle closed, this is something here, it didn't clearly uh, clearly did not follow the law, but in most cases it did. Remember, trading is not always 100%. There will be some false breakout, there will be something that you have to consider. That's why you need to manage the risk, but in most cases it did what normally it should have done. and the same thing happened here. So when this broke below, again retested. See here, look, the price went there, tried to break it, and came back, settled back below. So how this red candle, look, touched this floor level, came back below. So that means it has settled on the ceiling. So as a result, because it settled on the ceiling, we will not buy it, and then the prices started to move back below. And the same thing happened here. The price went here, tried to break quite a few times, couldn't settle above, couldn't settle above, and then prices started to move. Now, how you gonna use this strategy? Now, the big boys uses this strategy. That means they only buy or sell on this key level, on this key level. Now, the exact entry point for this key level, I have a strategy that I have linked below this video, the description. That so the strategy that we will be using is key level, but the exact entry trigger, that you need to find the rules for the entry in this point, in this point, in this point, in this point, with a very small stop loss. Because when you buy or sell on the key level, you need a very narrow stop loss, because your price is protected by this strong level. So you need a very small. That's why you have a very high risk to reward ratio for these types of trade. For example, if you trade this, all of this, look at what happened. If you go short from here, whatever it is, if you, so you need proper entry candle, that in your, that will be used in your strategy normally. Because I can't share this entry candle rules, because it's a rule of our paid course that we teach in our Forex Trading Wizard Academy. But if you are interested about it, you are always welcome. The link is below. If you are not interested, no problem. Just you need to find your own reasoning of entering the trade. But see how the profitable trade is. It's almost 1 to 10, 1 to 9 risk to reward trade here. And there, how many trades, see how many trade with a very high risk to reward. And that's how these big boys make money, and that is the reason why retail trader lose their money. Because retail trader take a lot of trade along the way, and then they get, every time they take a trade, sometimes they win, most of the time they lose, or they lose 50-50, but they gave a big loss, and then they'll lose their money. But if you know this secret of this key level, if you can find out, build the key level properly, and then you can have an edge over the market, that the price is where the price is. So first you need to build the key level, and then you have to find out the price action pattern that tells you that the price is either going up or down, the price is bouncing or not bouncing. So that's how you will find the proper strategy, using building key level and market structure with price action pattern. I hope that you understood this strategy properly, because this is really beneficial strategy. I learned a mentor long ago from who worked for a long time in these types of financial institution, who trade the market as a big boys. So I reveal this strategy to you so that you can use this strategy. If you know how to use it properly, if you know wisely, if you know how to build key level, no one can stop you from becoming a profitable forex trader. I hope you enjoyed this video, and make sure you subscribe, thumbs up, so that everyone can see it. And thank you for watching. I'll see you in the next one.